Hello, chart watchers, and welcome to this Friday, November 30th Market Watchers Live Show with your hosts, Tom Bowley and Ellen McGonagle. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's first take a look, see what's going on today. Got the Dow Jones Industrial Average trying to hold on to those gains we saw back from Wednesday. Currently, the Dow is down 31 points. The S&P 500 is on the positive side of the ledger, though, up 4 points today. The NASDAQ up 16. And the Russell 2000 up just under 2 points. 10-year Treasury yield continues to struggle. Been in this downtrend since back at the beginning of November. We've been declining in our yields for a better part of about 4 weeks now. And you can see we are down near that 3% level, currently about 3.02%. Volatility continued just a churning right now this week between about 18 and 20. It is up slightly today, 19.06, leading the action to the upside. And I got to be honest, I'm not overly excited whenever I see this, but utilities leading today and threatening a breakout above recent highs. Technology kind of hanging in, doing okay today. Consumer discretionary, same thing. Really more like a flag pattern. We'll see if these execute and break out of these sideways flag patterns that we have off of the uptrend. Energy to the downside is negative, and we've been kind of growing used to that over the past several weeks as the XLE has moved lower, but it has held around the $64 level and is trying to get back up through its moving averages. Workday, one of the best performing stocks today, came out with a really solid earnings report. We'll talk about this in a bit, but you can see the stock is up probably about 13-14% today, up nearly $20. Really big breakout here on WDAY. On the flip side, Goldman Sachs. We'll talk about it in a little bit, but Goldman Sachs, there was a couple of traders that pleaded guilty about some not so good issues, and stock was downgraded earlier today, and that is the reason why Goldman Sachs is such a laggard, down more than 3% today, and really off of this downtrend, not looking good. A little bit of a bear flag forming there. Okay, well, it is Friday, the end of the week. Of course, this always means we get Mary Ellen in to do what's hot and what's not, but I got good news. It's not just for what's hot and what's not. Mary Ellen, you're joining me for the entire day.
Yay. Yes, super, super excited.
Yeah, going to be very excited. Of course, this is as a result. This is a win-win. First, we have Erin Swinlin, who, of course, has been my regular co-host on Fridays. She has her own show starting today at 5 o'clock, Decision Point Show. That's 5 o'clock Eastern. So make sure you tune back in later today and get the Decision Point report. The importance of today, her show today, is that her monthly DP numbers become final. Today is November 30th, so the last trading day of the month. So you want to make sure you tune in. But, having Erin kind of moving off and doing her own spin-off show has also resulted in us getting Mary Ellen for a full day. So this is exciting. Glad to have you.
Oh, great to be here. Thank you. Yeah, and I look forward to tuning into Erin's show later today.
Yeah, it's, one thing, with this show is it's kind of evolving. I mean, the market's open, and so we got a lot of stuff going back and forth sometimes, not too often, because the middle of the days tends to be somewhat slow, but occasionally we can have a pretty big move, a change between when we start the show and when we do the next market update or by the end of the show. And so there's a lot of fluidity, I guess, in our show that I guess is, if you're a trader and you like that kind of movement, that's the benefit. But the thing with the show that Erin's going to be doing is the market will be closed. So she'll be able to look at exactly how the market closed and be able to go into not only her monthly DP signals tonight, but also end of the week as well. So there was a purpose for having it on Fridays, because I do think it sets up very well for a lot of her decision point analysis. All right. So anyway, just make sure you do tune in for Erin's show later today. Okay, let's go ahead and get into the schedule. What we got going today, Mary Ellen?
Yeah, actually, there is a lot coming up next week. It looks like Erin's going to be doing her workshop next Tuesday. And then as a guest on Wednesday the 5th is Gaddis Rose. And he's always a wonderful guest. I love listening to him. And then on the 6th, Bruce Frazier will be in. So it looks like a packed week next week with some wonderful guests. And today, of course, I'm going to be doing what's hot and what's not. and there's certainly quite a bit to cover. We've seen an amazing recovery here in the broader markets. We'll then be moving on to our 10 in 10, looking at various stocks, UAL. And then from there, we'll go ahead and do Turning Point. This is a wonderful segment where we review stocks that are potentially at turning points, and we'll review what we're seeing in these various stocks that could very well be putting them on the move, hopefully higher.
Yeah, and that's going to be an interesting segment too, because it'll give everyone a little bit of a look at how you look at the market and how you look for turning points on maybe some individual stocks and so forth. So looking forward to that segment at the end of the show. But first, before we get into all of that, let's take a look at some of the technical news. We'll start off with the key economic reports. There was really just one today. You can see it on your screen there. In November, Chicago PMI came out well ahead of expectations. Kind of shocking, actually, 66.4 versus 58. And if we take a look at the reaction in the Treasury market, just a collective yawn. We actually went lower today at the open from yesterday's close, back down to test kind of the lows from yesterday. And I mentioned as well, I think I had an annotated chart yesterday showing that the prior highs came in right about that 3% level. And that is where we are now on this pullback. So I would be looking for a move off of this level. And I'll tell you what, next Friday's jobs report, I think, is going to be a really, really big report for a lot of different areas of the stock market and the bond market. Of course, you can see 10-year Treasury yield sitting down here at a pretty key level. And then, of course, the stock market's been bouncing off of some pretty oversold levels, trying to hold on to some longer-term support from back in February 2018. So there's a lot going on, and I think we want to make sure we pay attention to that report next Friday for sure, among others. All right, let's take a look at earnings. There were a number of earnings reports that came out last night. And I have to be honest, they came in pretty strong. We got VMware. You can see at the top of the list that did very well. HP just simply matched expectations. So no big shakes there, I would say. They did beat on the top line. And as you look at this list, the only one that missed on the top line was PVH. And they beat on the bottom line and provided inline guidance. But we'll go and take a look at some of the charts here in just a second. But several of these companies not only beat bottom line, beat top line, but raised guidance. In some cases, both revenue and earnings per share guidance. So it's pretty good numbers we need to go over. So first, I'm going to start with VMware. Let's take a look at the first chart here, and VMware on their news. Now they beat top line $2.2 billion versus $2.17 billion. Beat on the bottom line, as I just showed on that prior slide. They raised their fiscal year 19 revenue and EPS guidance, and we're getting a breakout above this triple top right about the 162.5 level. So I think VMware looks pretty good. I'm going to pull it up on a relative chart. Maybe take a look at all of these on a relative chart and see what's going on. But okay, here's your software group, which we have seen a number of pretty good reports coming out recently. But the overall software group is in a downtrend, and yet here we have VMware breaking out to a new high. So what does that mean? Well, we've got a stock that is outperforming its peers by a pretty wide margin over the course of the last month or so during the overall weakness. And not just that, but VMware now has broken out to a new high relative to the S&P 500. Software, I know it's been weak. We look at this chart and we see the downtrend, but keep in mind the S&P has been downtrending. Software on a relative basis is actually breaking out because it has not fallen as much as the overall market. And with some of these reports coming in now, you can see software making a pretty big move to the upside. So if the market breaks back to the upside and we resume that bull market that we've been enjoying for almost a decade, you're really going to want to keep an eye on these software stocks. They may not be done just yet, but VMware, certainly a great looking stock there. Let's take a look at HPQ. This is HP Inc., of course. A little bit different story here. Of course, it's in a group that's not been performing well, with Apple struggling. That's computer hardware. And this stock has also been pulling back, although on a relative basis, it's outperforming. Still, I'm not seeing any real absolute strength. I'd be careful until HP can get back through the 20-day moving average. For me, that's a little bit of a deal breaker. I'd stay away from it for now. Here's Workday. This is the one I mentioned at the top of the show. Big breakout. This is in that software space. And again, you have another relative leader, especially with the results. They beat on their top line $743 million versus 723 million. And then they doubled their estimates, 31 versus 15 cents on the bottom line, and they raised their fiscal year 19 revenue guidance. So you've got a really strong group, and within it, you've got one of the stronger stocks. So I think that Workday, I wouldn't go chasing it, but off of the bottom here, you can see there's been a lot of buying taking place, huge volume today. I'd keep this one on a watch list and think about it on a pullback. All right, let's take a look at Palo Alto Networks, PANW. Beat on the top line, beat on the bottom line, raised Q2 revenue and earnings per share guidance. Huge move to the upside at the open, but so far it's gone back down and is now down for the day. I'll tell you what, though, if it can hold back above the 20-day moving average, this is one that could have already printed a bottom. I want to see how this finishes today. If it closes back below the 20-day, I think we're probably going to go back and test that 160 area. But if we can rally off of this earlier low, get back up through the 20, we might see a rally later today in PANW. Very strong report. Next up, Splunk, SPLK. Splunk, really nice move to the upside recently. They also came out, beat top line by a wide margin, 481 million in revenue. Market expecting 433.6 million. Bottom line, 38 versus 31. They raised Q4 revenue guidance, and all of that resulted in what could be a character change on the chart. Nice downtrend that was in for a while. Looks to me like it is broken out above. It's still on a relative basis is not as good as some of the others, but it is the relative strength is building. So it's a situation where as long as it holds onto its, say, its moving averages and gap support on any pullback, this is one that could gain steam relative to its peers as we go forward. PVH, I mentioned, did not beat their top line estimate. They actually came just a hair short, 2.52 billion versus 2.53 billion. They did beat bottom line, but offered up just inline guidance. And with a market that's been retreating, that just simply wasn't good enough. We went up, tested the 20-day from underneath, and this is why I need to see these breaks above the 20-day. Big volume today, and the sellers were lined up as soon as we hit that 20-day moving average. Not good. A couple of other individual stocks that reported, smaller companies, Ambarella, AMBA, beat top line, beat bottom line, lowered their Q4 revenue guidance, and the stock is up 18.5%. So what that tells me is that there was a lot of negativity already built into this stock, and the fact that they're now finally delivering the perhaps the last bit of bad news, you got a lot of buyers coming in. So this has not been a good performer, obviously, as you can see from this chart throughout 2018. Fell from $65 a share down to $30, so more than a 50% haircut. But it does look like this is a character change on the chart, something to keep in mind as we go forward. GameStop, GME, not good. Beat top line, beat bottom line. That part was good, but they lowered their fiscal year 19 earnings per share guidance for the entire year. And as you can see, pretty big gap down at the open. We got as low as 1280 intraday. Now we're back to 1390, but even with the rally, we're still down 5%. I think this is one that's just trading in this range. I would probably not do a whole lot with it. And then the last one I have is Zuo, Z-U-O, Zora. You can see the move down today. They beat top line, beat bottom line, raised their guidance. But I like to see the market reaction positive, and we're not seeing that with this stock here. So I would continue to trade it based on a downtrend until we get a breakout. Good news on the earnings side. So if we could get through about 21, I think this is a stock that could move. But in the meantime, probably just sit on the sidelines and watch it. All right. Went through a bunch of stocks there, but I do want to turn it over to Mary Ellen. I know, Mary Ellen, you've been kind of looking at this evolution of mobile payment companies. What do you have for us today?
Yeah, absolutely. That is a huge growth market area within financials. And I'd love to share with you what we're seeing there. A lot in the way of advances. And the biggest part of this big push and move into mobile payments is how it has been impacting individuals for quite some time. For those of you that use payment sharing apps such as Venmo and some of the others that are out there, the big push more recently is into corporate and being able to help companies really reduce their cost as it relates to accounts payable. So what we're looking at here, this is XLF, quite simply the financial sector ETF, and it's been holding in okay. But telling you, as someone who follows the market very closely, pardon me, this mobile payment area has been super growthy. And let me just go ahead and pull up a stock here to give you an idea of the strength that's been exhibiting, bearing in mind really how weak the markets have been for the month of November and even last month. But this is American Express, and you can see the big uptrend here, really ignoring what was going on in the broader markets. We're going to review a couple of other stocks in this area as well, but let me give you a bit in the way of background as far as really what the growth numbers are and what they can be within the B2B area. So to give you an idea, for some of these small to medium-sized businesses, anytime they process an invoice, it costs them anywhere from $16 to $22. And I'm talking about using checks. The checks go in the mail. You're talking about time lag as far as these companies being paid. So this mobile payment ability that's now being transformative is allowing them to cut their per invoice cost down by more than half. It's only going to be costing them about $6 to $7 to automate the account paying. And also larger companies can spend maybe about $9, but they can cut it down $4. So you're seeing less than 50% per payment processing fee. So Goldman Sachs came out. They see B2B, which is business to business payments. They see it as a $950 billion annualized opportunity. So the stocks within there, we're going to go ahead and cover some of them. This is in North America. Europe is a little bit further ahead in the curve as far as the adoption of these new automatic mobile payment methods. But Europe is expected to have a market of 186 billion. So you can see the growth prospects are really there. They're just now starting to catch on fire, the technology, but the appetite is there. So let's go ahead and dig in and take a look at some of the various stocks. So I talked about American Express, and we can certainly look at a daily chart. But with this particular stock, I know it sounds a bit old school and it wouldn't be into this new technology, but indeed they have spent a lot of money as far as updating the ability for this mobile payment. And they just signed a deal, in fact, with China. They're the first company to become what's called the first foreign payments network with mainland China. And so they've received preliminary approval from China's central bank to go ahead and begin rebuilding a payment network. And it's going to be huge business for them. And American Express also announced last week a mobile payment capability for businesses that hire consultants. And while it doesn't sound overly exciting, it's another area where corporations that hire outside individuals can really save money as far as paying these consultants and the processing and so forth. So there's a lot going on certainly with this company, and we can see that the stock is finding support at this upward trending. I like to use these simple moving averages. The green is your 10, the red is your 50-day, and the blue is the 200. So the stock just broke out of this base. We can move down just a little bit here and see that this is a 2-month base. The stock is breaking out on volume, and your RSI up here on the top is positive, as is the MACD here on the bottom. But let's go ahead and move on and take a look at another stock that is very prominent in this mobile payment move. This is a company called Square. The ticker symbol is SQ, and you can see that it has fallen down. This is in line with the broader markets, but it does appear to be recovering after breaking down below its 200-day simple moving average. We're not quite positive yet as far as that RSI coming up above this net neutral or the MACD. We've had that positive crossover, but it's not quite positive yet. And I believe this may be the last stock I'll have time to review, but I'll go ahead and share the other tickers with you as well. But Square, they do a payment processing hardware that they provide. And they also have Square Capital that provides business loans, huge growth area for them. The company also just announced a product that is a competitor to Venmo. It's the Cash app, building a massive user base there. And in September, they rolled out a new mobile app for payroll services. So that, I will leave it at that. But one last thing with Square, they did post 6 consecutive quarters of accelerating revenue. So they're really on a growth ramp. The other stocks here, Visa, MasterCard, EEF, I would urge you to take a look at that. There's a lot going on with those companies. So,
wow. That's a lot. You went through a lot in a very short period of time. I do want to mention, though, on Square, this one looks kind of interesting to me. And I know, Mary Ellen, you talk a lot about the 50-day moving average. I don't know if you look on longer term and use the 50-week moving average, but if you could share with everybody on Square, if you could maybe change your daily to a weekly chart.
You bet.
It's going to show that the stock went down last week, went below its 50-day moving average, came back up and held it on the close last week. And that was the first 50-week test in 2 years.
Wow.
Square, and now it's recovering. And the daily chart that you had up a minute ago had that hollow candle at the bottom, which to me looks like maybe an exhaustive type of a selling event. So I don't know. What do you think?
Great observation. Yeah. And for my work on the weekly, I'm going to use the 40-week, which is better known as the 200-day. These simple moving averages have been developed and utilized by institutional managers for many, many years. They're the big guns that really move the market. So it's important for me to stay on top of those same moving averages. So here's this 200-day simple moving average. And you're absolutely right. It undercut last week, very tough period for many stocks in the markets, but it was able to close the week above that 200-day. And that to me is very constructive. It got fairly good volume on last week's holiday shortened week. And it does appear poised to continue. This RSI is poised to turn positive, but I really like that this upward trending 200-day, this longer term, that's telling you that the longer term trend for this stock is indeed up. MACD, even though it's trending downward, it's above this net neutral 0. So it looks to be in very fine shape.
Yep, great analysis. All right, we are going to move on. And I know that we're going to start with technology and the what's hot and what's not. The technology group, that whole area has been obviously one of the best areas of the bull market that's lasted almost a decade now. They've certainly been leaders in the past, and we're starting to see some rally here. What are some of the stocks that you like as we go with technology?
Oh, you bet. Yeah. Technology was a very, very big winning area. Certainly following the correction earlier this year, you can see this tremendous uptrend. We're looking at a weekly. So tech really led us out of that February correction, really zoomed. One of the first of 2 groups we're going to be covering today that are hot this week after suffering quite a bit here. So we are looking at a weekly. You can see that technology did top back here in September. We'll take a look at some of the underlying groups within there that really look hot this week. And Tom, I know you talked about Workday and some of those software stocks. And indeed, these software stocks appear to be making a comeback. So I'm going to pull.
I'm not seeing any of your charts.
Okay. Sorry about that.
No
I'll
problem.
go ahead and share it and we can carry on. Because what we are going to be taking a look at is some of these stronger software stocks. Hopefully, I'm going to go ahead and start by looking at IGV, which is an ETF for these software stocks. And you can see that it's up 7% for the week. And this is after a big tumble here. So what we can take a look at, certainly within technology, many of you may know that there has been a reshuffling of these sector components. And technology, they took out a number of heavyweight stocks, Google and so forth, and moved it over to communications. So now the 2 leading stocks within that tech sector, XLK, is Apple. It's up 3% this week, but Microsoft is the other. Those 2 stocks make up 38% of the technology sector. Microsoft is up 6% this week. But let's take a look, drill down at some individual stocks, because in software, a lot of the groups and names were in bear market territory as of the close last week. They were down as much as 30%, some of these software enterprise. Let's take a look at CRM. This is a company that reported earnings earlier this week. We can see the stock is up 16%. And what I can do here is go ahead and take a look at a daily on this and really give you a sense of just how much damage had been done. This is a stock that was down over 30%. And then this gap up here on earnings. So now we have a stock where the price is back up above these key simple moving averages. Your RSI is positive and your MACD is trending positively. Now, for those of you that think 16% one and done, I would urge you to take a closer look, because that is still not even half of the damage that had been done. We may see a bit of a digestion here, but certainly an uptrend looks to be in place. NOW is Service Now. This is another stock that a bit dicier here, but we can see this gap up. This is in tandem with ServiceNow reporting their earnings. The stock has now jumped up above these key simple moving averages. Your RSI is positive and your MACD had a positive crossover. This you can see is a bit more volatile in nature, but it is viewed as a leading stock in the software space. We'll take a look at a couple more here before we move on to other areas. This is TWLO, Twilio. And here is a stock, actually, if I can get the ticker symbols up properly. This is a company that really didn't get as damaged in the broader markets correction, and it is now approaching this prior high. So this is a stock that appears to be breaking out of a base. It appears poised to break out of this 3-week base. And it's very, very interesting that the RSI is positive. Your MACD really never got negative as with other stocks. So that type of action, when you see a stock that's able to withstand downward pressure that's occurring elsewhere, really it points to a leadership stock that should continue to carry on as long as the broader markets do. We can take a look at another stock here, Adobe. These are all bigger, better known stocks. Adobe, of course, is a company that is a software design, and we can see that this is the sell-off that was in line with a lot of these software stocks. Software was an area that indeed did get hit very, very hard, but we can see that it too has gapped up and broken back above these key simple moving averages. RSI trending positively, MACD trending positively, poised to go back up above that net neutral zero. So ideally, what we would like to see, and you can go back historically and look at these stocks, you want them to ideally form the right side of a base. Once they break out to new highs, really that's when the stock can continue to carry on. So at this juncture, we're still in that repairing process, but it certainly is trending quite nicely and quite positively. And one last name that we can take a look at is a company that I believe reported today. Tom was mentioning PANW. This is Palo Alto. This is a stock that really did not do as well as other software stocks when they were really on fire. A number of underlying software industry groups were up well over 40% before correcting, but Palo Alto fell out of bed well before other software stocks. So its recovery is going to take longer. I do not view this as a leadership name, although it is breaking back above key simple moving averages and behaving in a positive fashion. But this stock appears to have a bit more in the way of work ahead of it.
Yeah, I know that we have seen a nice bounce in technology in another area. I know we were talking about earlier, Mary Ellen, consumer discretionary. We've been seeing some strength there as well. And these are two sectors that are pretty aggressive groups that you want to see leading to the upside. But where are you seeing some of the leadership over the past week in consumer discretionary?
Yeah, absolutely right, Tom. Both tech and consumer discretionary stocks were leaders going into that October correction in the broader markets. consumer discretionary is another area that led us out of this February correction earlier in the year. There were other areas that were still struggling, but consumer stocks came on super strong. They had a great holiday season and just kept on showing really good numbers. But take a look at this drop here that occurred, and it really was not what you want to see when you're looking at the broader markets. You want that leadership to remain intact, but in fact, these consumer stocks over the last 2 weeks alone, they dropped 7.5%. So what we are looking at here more recently, certainly this week, are a lot of bounces. And let's take a look, because some of the damage that was done in these recently leading stocks really was a bit overdone. This is Ross Stores, ROST. We're looking at a daily chart, and the stock came up and broke out. And this is certainly, take a look at the action here. This is while the October correction in the broader markets, it really was withstanding all that pressure, charged to new highs once that October, after the midterm election, there was a sense that we might be out of the woods. It was priced for perfection, came out with earnings, and the outlook was weakened, and the stock just fell right out of bed. So we can see that it is trying to recover. It's having a very nice bounce this week. It's up 6%, but still has quite a bit of work to do. We're still below this key longer term simple moving average. Let's take a look at another stock that had been a big winner, but it too had come out with numbers. Same store sales were a little weaker than anticipated. Again, held up well through the October correction, fell out of bed, and is now trying to recover that damage. So a lot of work may still need to be done, but they are having very nice weeks. And I can take a look at a couple of other areas within consumer discretionary. Let's take a look at some of these restaurant stocks, and these are names that have been doing well. This is McDonald's, MCD. You can see the nice advance that the stock had. This gap up here is on earnings. Again, ignoring all the downward pressure in the broader market, super strong uptrend that's still in place. McDonald's is doing a lot in the way of offering digital menus, curbside service, delivery. They signed up with a delivery service, and they're also revamping their menus. So this investors like the stock, and it continues to be in a very strong uptrend. DPZ is another stock that we can look at. This is a company where analysts are raising estimates for this stock. And as many of you know, a lot of these pizza delivery services have been in the forefront as far as offering digital sales. You can go online, order. That's really been quite the boost for these companies. So let's take a look at DPZ as Domino's Pizza. We're looking at a daily price chart, and we can see that the stock fell out of favor. This is in line with the broader markets. But what I like is that if we look at the action going back a little more than a week ago, the stock undercut that 200-day simple moving average, but really has been able to rebound quite nicely. So now it is assuming a life above these simple moving averages. Your RSI is positive. Your MACD is poised to turn positive. And ideally, what we want to see is a continuation of the formation of the right side of this base with an eye toward the stock breaking out of that base. And I'm going to go back here historically, show you an example. Stock breaks out of a base and continues in that uptrend. So the formation there does appear to be taking place, provided that the backdrop of the broader markets. Let's take a look at another restaurant stock here. Ticker symbol is QSR. This is Restaurant Brands, and this is another one that's a little earlier in its potential downtrend reversal. The company owns several brand names, Burger King, Tim Hortons, Popeyes. But I will tell you, they offer a 3% yield for those of you that are still cautious on the broader markets. But take a look at this stock where it really fell out of favor, but again, more recently has subsequently broken back up above these key moving averages. And often these are areas of upside resistance. So once we break above that, you really have a lot more freedom, upside possibility. And also wanted to point out that Oppenheimer, their price target for the stock is 75. And the stock today is trading at about 58. So a lot of analysts are really starting to tune in strong same-store sales with a number of their underlying brands that are in there. And we can take a look at a couple of names. One last name that I wanted to look at here is YUM. This is another big portfolio stock, Yum Brands. And take a look at this stock because if you look at it technically, it has had what's called a double bottom. So we can see where the stock fell in line with the broader markets in October and then rallied. Take a look here in that mid-November period. We did pull back again, but this low is higher than the prior low, and that is a very bullish signal. And when you combine that with other signals such as the MACD trending positively, and sorry, that was the RSI going up above net neutral. Take a look at the MACD. It signaled positively with that black line up through the red and also going above zero. So now we have a stock that this week is breaking out of a 2-month base, and it is doing so on fairly good volume. So really quite bullish. And the stock came out with very strong earnings at the end of October. This is that gap up here on their very strong earnings. Analysts are revising their estimates up. The company just signed a deal with another firm called Grubhub, which is a delivery service, food delivery service, and analysts are seeing a lot of potential growth so that individuals do not need to go to an actual store. They can order online and have their goods delivered to them.
Yeah, that's one of my favorite tickers, Yum.
Yeah.
I get a kick out of some of these ticker symbols. I also had a nice little pun earlier when you were talking about Domino's Pizza. Wondered if it was in a topping structure, but never mind. It was.
Yes, a pepperoni topping structure. We'll have a new name for it.
All right, well, let's move on. I know we got some healthcare stocks. Healthcare has been very strong, and I actually wrote my blog this morning about healthcare's relative strength. Historically, December and January are the best 2 months for healthcare relative to the S&P 500, and we've been seeing some strength there. So, give us some names in healthcare.
Yeah, you bet. And healthcare, as many of you know, is viewed as a defensive sector. So it really had been doing well on its own in a backdrop broader market that was struggling. But it was given a boost, I would say, the healthcare sector following those midterm elections. So in addition to having that defensive feel and some of those healthcare stocks performing well because of that, the again, midterm election results were really quite a boon for this group because there was quite a bit of concern in the way of thinking that the government was going to squash healthcare drug cost and also eliminate Medicare and some of the healthcare benefits. So there are several areas that are really have been doing well, but really picked up. This is Pfizer PFE. We're looking at a daily chart. The stock's up about 5.5% on the week. And we talk about stocks breaking out of bases. That's precisely what's happening here this week. And that RSI is positive. Your MACD had that positive crossover. Pfizer has a lot going on in the way of their pipeline. They also just raised prices in January on 42 of their drugs. And again, that was a fear that there was not going to be an ability to raise pricing. The company also just had FDA approval on a cancer drug last week. They have a number of stocks in the pipeline. So that's just one of many examples. We can certainly take a look. Merck, any number of these larger pharmas are really marching to new highs. And then another area within healthcare that got a big boost is healthcare providers. And this, again, is an area where there was thinking that benefits would not be continued, but with the divided House, they are expecting that Obamacare will remain in place. So this is AMED, Amedisys. This company is a home healthcare provider, and this has been a really strong space. This is the leading stock in that area, AMED. You can see how it broke out this week out of a very long base that is taking us back to September. So we talk about a saucer-like base. The stock breaks out, does so on big volume, and it does appear as if that uptrend is in place. Now, the stock is up over 10% on the week. I would certainly look for some sort of pullback at some point. And then we can also take a very quick look at some of these biotechs that are coming back into favor. They're not quite there yet as far as reversing these downtrends. This is more for of note. When you see these bellwether biotechs coming back potentially, it could be quite interesting. I'm sorry, that prior stock was Gilead. This is Amgen, AMGN, a little further along in its potential advance. But these are the larger go-to, which many of you may know there are over 500 biotech stocks. So what you want to key in on as far as the strength, this is Regeneron. Again, not the prettiest of charts, but just to show you that biotech stocks are coming back into favor, which is a risk on, and that's something we like to see. So I'll leave the healthcare area at that.
All right. Well, I know earlier we were talking about consumer discretionary, and yet consumer staples, when you look back at the past couple of months with the market being so weak, consumer staples had been wildly outperforming consumer discretionary, but we've seen that kind of reverse here in the last week. What's wrong with staples? You have some examples there?
Yeah. So now we're going to go ahead and just dig into what is not hot this week. And as you can imagine, as the growth stocks are seemingly coming back into favor, there's been a little bit of pushback in some of the consumer staple areas. And this is a daily chart. We can see it's advancing. It's certainly not missing out on this week's rally, but it's not quite as powerful as some of the other areas. It's up probably about 2.5% on the week versus tech and discretionary, which are up well over 5%. So within consumer staple, there's one area in particular that this week is not doing so well, and that's packaged foods. We can take a look at SJM. This is J.M. Smucker Company. Take a look at that drop gap down here earlier in the week, and this is all about earnings. They came in with numbers that were below estimates, and analysts revised the company's earnings estimates going forward. And so even other areas within the packaged food space are also getting hit this week. This is GIS, General Mills. The company reported earnings in late September. So let's go take a look here. This is this gap down. They came in with numbers that were below earnings, and the stock is continuing to suffer, not find its way out. Analysts are pointing to weak unit sales and high cost as far as being able to develop product. HIAN is another packaged food, and this really can't get out of its own way. The company just is not able to execute. They've talked about having initiatives in place, but take a look at this gap down here in the beginning of November. That's another negative earnings report, well below earnings. The company's trying to reduce the number of products that they offer. That's also taking a bite out of sales. And then one other last name that we can take a look at here, ticker symbol is LW. Now, this has been a big winner in the consumer staples space. This gap up here is on very, very strong earnings. So this week's drop, it's down about 5%. It could very well be just a pullback. Oftentimes when stocks have these explosive moves, particularly in normally stayed areas, they will just simply pull back to the prior bases and reform and come back. I wouldn't say that the upward move is entirely potentially over for this stock.
All right. Well, I know, we kind of taken a look. We take a look quite often at the dollar, and the dollar, if you look back over the last 10 days or so, has been on a tear. It had 1 hour of pretty good weakness earlier this week, and that's when Fed Chair Jerome Powell came out and gave his speech. And at the next hour or so, the dollar took a pretty big tumble. But when you look over the last 10 days, I mean, it's been in an uptrend, and it's gapped up, and the UUP's up about another 0.5% today. And of course, that provides some headwinds for mining and gold. What do you seeing anything there? And also with oil as well. But
Yeah. You're absolutely right. This strong dollar is not going to bode well for commodities historically. And certainly when talking about what is not hot this week, we can talk about some of these gold stocks, steel, some of these metals. So within the gold area, let's go ahead and I can point out to you when you see a strong dollar, how quite simply you can use stockcharts.com to go ahead down and look at what's called a sector summary. And from here, among these sectors, the materials, this is going to be where those commodities, those metal stocks are located. And let's go ahead and take a look at gold mining stocks. And what I'm going to do here is then sort it by the 1 week mode. We have some tiny outliers that are up for the week, but for the most part, we can see that these stocks really are getting hit on the downside. And taking a look at some of these, certainly Coeur d'Alene is a well-known stock in this space. And we can see the continued deterioration, again, relative to that dollar. And going back to the commodities area, we can also take a look at some of these other steel stocks as another, for instance. They are also getting hit by that strong dollar. A number of these steel stocks, we have some names in here that are going to be a little better known than others, but this is TS Tenaris, and really just fell right out of bed there on the strength in the dollar, but also you get a sense that there are other dynamics at play as far as demand for steel, global growth slowing, and that's also pushing these stocks down.
All right, we got, I don't know, maybe a few more minutes here, so I'm going to give you a couple of areas. Let's talk about apparel manufacturers, restaurants, because you mentioned restaurants earlier, Yum and some others that have been doing pretty well, but there's others that haven't been. But if you look at apparel manufacturers, restaurants, and say auto and truck equipment company, those parts companies,
yeah,
there's been a lot of downside there. Maybe you can give a name or two in each of those areas. That
sure. Yeah, we can cover a couple of names. What we're looking at here is Ralph Lauren. RL is the ticker symbol. And so these manufacturing, the apparel manufacturers, a lot of their products are manufactured over in China. This is all tariff related. And in addition to being tariff fears, the tariffs are now being realized. So these particular companies are suffering. Ralph Lauren is one, GII is another. This is another apparel manufacturer. You can see the stock really has tumbled and is continuing to underperform the broader markets. Michael Kors is another one, KORS. This also came out with weak sales. So in addition to being a manufacturer that sources from China, they're also suffering from weak sales. We can also take a look at some of the restaurant stocks that are not doing well. And a lot of this has to do with same store sales, lack of expansion. So when you see this type of gap down, this is NDLS. The stock is called Noodles and Company, and it really had been a big winner for most of this year. It was outperforming. This gap down is on earnings. The stock is continuing to suffer as analysts are revising their estimates lower following that weak earnings report. PZZA, this is Papa John's. It's been in the news quite a bit. While the restaurant, the company has been doing fairly well, there's been a lot of issue with the CEO. He came out with some very off-putting remarks. A venture capitalist firm came in to potentially take over, but this week they withdrew their potential offer, and the stock is just getting pummeled, and it's down this week. Let's go ahead and move on to auto, truck, and equipment stocks, because really this is another area. Despite growth in auto sales, these guys are not doing well. This is Garrett Motion. Let me go ahead and pull up a stock that is a little bit larger and well known, Delphi, DLPH. We are looking at a daily price chart. You can see the general decline in this particular stock. These guys are focused on, they provide auto and truck equipment. They're not retailers, auto parts retailers that are doing quite well, but these guys are finding demand for their products are dropping off. One last one we can take a look at is APTV. This is a spinoff from Delphi. They provide products to autonomous and self-driving cars, and really suffering in very much in a continued downtrend.
All right. Well, that was a lot to go over in just 30 minutes, but you did a great job.
Oh,
we'll
good.
take a quick look at the summary of some of the areas that Mary Ellen was able to cover. And I know that we've gotten comments from viewers that your segments are always the fastest in terms of the number of stocks that you're able to cover. And I got to agree with them. I think.
Well, just let me know if I need to slow down a little bit. There's just so very much going on in the markets. It's always super exciting.
Yeah, I think technically it's good though to have. It's really good technically to have those quick analysis done. Technically, and that's I'm a CPA, so I was in public accounting for a long time, and you can spend literally weeks studying the fundamentals. But I can look at a chart, and I know you're the same way, and most technicians are the same way. I literally can look at a chart in 15 seconds and decide if I have any interest at all in investing in a company. And you can't say that when you're trying to review fundamentals.
True, definitely. When you can marry those fundamentals with the technical picture, that's the winning bet, if you will.
Yes, it is. All right. Well, we are going to get into 10 and 10 in just a minute, but I thought before we do that, maybe we can go in and take a look at the poll that we asked everybody, because, Mary Ellen, you concentrated on a lot of strength that we saw in technology and in consumer discretionary and in healthcare. And I find this poll result here to be somewhat interesting. Most of our viewers believe that healthcare is the most likely to continue the strength going into next week. Do you have a choice? I mean, is there one of them that stands out to you that you expect?
I think we have a very, very intelligent audience. Let me just say that. And yeah, indeed, healthcare is a positive double-edged sword in the sense that it does have that defensive nature. The market is in an uptrend right now, but it has a bit more in the way of headwinds. So you have that nice defensive nature to it, but there's a ton going on as far as growth as well. And then historically, when you look at measures and the concept that the government is going to be stepping aside, allowing healthcare to continue to expand. So it has a lot going for it. So I would agree.
Yeah, I would agree for a couple of different reasons. I agree with the group, 82% saying healthcare is the most likely to continue. Probably could have added a fourth answer, which is that I don't expect anything to rally next week. That would have been a little different. And maybe more of you would have responded too. Maybe some of you are sitting there saying, well, I don't think any of them are going to go higher next week. I think this is just an oversold bounce, which it very well could be. But I would agree with you. I think number one, when we look at it from a historical perspective, as I mentioned earlier, healthcare relative to the S&P 500, December and January are clearly the two best months. And I think technically when, you pulled up a number of the charts, I think healthcare, a lot of the areas look pretty good. Healthcare providers just broke to a new high. Pharmas have been doing pretty well, especially on a relative basis. And I wrote about the medical equipment companies in my blog this morning, and the fact that they're trying to break out above some key short to intermediate term resistance. So, and then also if the market does rally and the bull market continues, not only do you have strength in those areas, but you would expect the aggressive biotechs to also join in on that move to the upside. So I agree. I think it's kind of got this two-headed monster with healthcare. Some of it's defensive, some of it's aggressive, and we're in a time of the year where the group tends to do pretty well. So
yeah, and hospital stocks too. We can't leave them out because again, they are going to hospitals, as many of you know, they are mandated to service patients regardless of insurance. There was a big fear that Medicare, Medicaid, those benefits would vanish, and not so. Potentially with that midterm election splitting the vote, so to speak.
Yep. And I would probably agree with consumer discretionary being the lowest. I've just seen too much weakness in the retail space. Retail had been so strong for a while. And this bounce, I was looking at the XRT, which is a very widely diversified retail ETF. And it's bounced. It's had a really nice week. but it's up against the declining 20-day moving average, which many times in a downtrend is some difficult resistance to pierce. But
I did leave out Amazon, so that's one that can't be ignored. They're the big elephant in the room as it relates to consumer discretionary, and that stock's having a really nice week. So it'll be interesting to see if it's able to truly reverse that downtrend. It's finding resistance at its 200-day right now, but it's up 11, almost 12% on the week. So I know that's a widely watched name within the discretionary space. So we'll keep an eye on that one.
Yeah, let's go into the 10 and 10. I've got this chart up. I've got the Amazon chart up, so we'll do a bonus. We'll do 11 here.
Okay.
But Amazon chart, and what I'm a little concerned about on Amazon is that when you look at each of these reaction highs, we've got this trend line. And so we're testing the trend line. We got a lot of overhead. This rally's been great for Amazon, but I do notice that the volume's been lighter. I also noticed that we've got the downtrend line. I think Amazon's a great company. I think if we're talking about where it's going to be in 3 to 5 years, I would have no problems with it. I'm just in the short term, if this market does roll back over, Amazon's at an area where it wouldn't shock me to see it maybe have a rough patch. We'll see.
All right. And we can look at some of those other names. How about we look at UAL?
Yeah, we're going to start off. This is going to be our first 10 and 10 stock today. And by the way, the stocks were just kind of randomly picked today, so don't take any offense to how they were selected. I looked through the list, saw a bunch of them that were out there, and tried to pick 10 that we haven't really looked at in a while. So here's the first one, United Continental. I know when we did this yesterday, the day before, I think Aaron had given me American, which was strengthening, but I said at the time that it wasn't strengthening as much as some others in the space. And I think United Continental is one of the strongest airline stocks, and I'll tell you why. Here you can see a beautiful move up on an absolute basis since July. Stock was as low as about $68 back in July. It's now over 95, actually over 96 today. So that's a pretty big move up when we've been going through so much difficulty in the overall market. Airline stocks, yes, they're rallying. They're still not above where they were in September, though, and yet you can see UAL is. So what does that mean? It means you got a really strong stock within the airline space. This is the relative chart, UAL versus airlines. Then we've got UAL versus the S&P, which obviously it's been performing well. And airlines relative to the S&P have been performing extremely well the past 7 or 8 weeks. And of course, the big reason, crude oil prices have been tumbling throughout October and November. And that's a pretty major expense item for an airline. So I think the crude oil prices obviously are not going to continue to tumble like this. So we want to watch the technicals. But I think you've got one of the leaders here with UAL. I would watch the rising 20-day moving average. As long as it stays above that, I'd be fine owning it. I think UAL looks pretty good. What else we got?
Okay, how about Mylan, MYL?
All right, MWL, downtrending, big gap up. That potentially could be a game changer. But after 2 or 3 days of strength, you can see the selling is kind of kicked in. I'm just going to watch a couple of things here because this is, you were just talking about this, Mary Ellen. Here are the pharmas breaking out to new highs, and Mylan is part of the group, and it has just not been performing well in 2018. So I would say this. I like pharmas. I just don't think this is the one that I would be looking at on a relative basis. Look at the weakness versus its peers versus the S&P, and yet you've got a group that's outperforming the S&P. So let me annotate this real quick. And I think before I would even begin to look at owning something like Mylan, I think I would have to be watching, say a trend line somewhere along those lines. We'd have to break back above. To the downside, you've got support that comes in just below 30. I think this is kind of a zone right in here that I think Mylan could just trade in. I think there are many, many better alternatives within the pharma, so I'd avoid it.
Super, yeah. And so the next one, I have SMF. I think it might be SMFG, perhaps.
SMF. Should be maybe it's SFM.
Okay, that sounds like it. Yes.
That's I think that is a food. Is that
Sprouts? Good old Sprouts.
Oh, Sprouts. That's right, Sprouts. Okay, Sprouts. Big move to the downside. I think I saw them in the news. I'm not sure if they reported earnings. This definitely could be earnings related or maybe something else. I don't know if you have access to news, Mary Ellen, to see whether or not.
Yeah, it is not earnings related.
Okay.
Take a quick
Um,
look.
any idea what it might be while I look at the chart? Because technically, obviously, this is a big problem here with the stock on the gap down. It had been performing pretty well. So this news came out of nowhere. And I think the last time I had looked at this, we
Oh,
were
I see.
support around 26, 26 and a half. And we
Mhm.
gapped way below that to open the day with heavy volume.
Well, their CEO is very unexpectedly leaving the company at the end of the year to pursue other interests. And I know that he was a highly regarded CEO, and I think that just took the market by shock.
Yeah, it's funny how, we talk a lot on the show about how sometimes the news, you see the news kind of in the chart before it actually breaks, especially with earnings reports. You've got analysts from Goldman Sachs and many of these companies going out and talking to management, and they get a sense of what's going on in the business. And so a lot of times you'll see the downtrend, and then after the downtrend for 2 or 3 months, we get the earnings report that says, well, we beat in the prior quarter, but we're lowering next quarter. And it's like the news has already been released to the investing community, and it's not insider information. It's just simply analysts going out and talking to these companies during periods that are non-quiet periods. But here with SFM, this one looks to me like it just came out of the blue.
Wow, they're getting clobbered.
Yeah, big drop, down 14%. And on news like that, I mean, at this point, I see up here now resistance 26, 26 and a half. I see support 21. Maybe because it's rallied off of that earlier low, maybe it'll move up. I would be in maybe damage control if I own the stock. And if I saw any kind of a rally back up near these prior lows, I think that might be a signal for me just to try and minimize my loss and get out.
Yeah, good call.
All right, what else?
Oh, how about View Ray, VRAY?
All right, VRAY. Well, we bounced off support. Actually, not a whole lot going on there in terms of relative information. So let's just go with this chart, and I'm going to stretch it out to a year. The big thing for me is just the price support that it hit way back here from March, April. So we went right down there, hit and bounced. And after selling off as hard as this stock did, this is not a surprising area for a bounce. But notice the 20-day moving average when we did get a little bounce, and that's about a 20% rise from $6 to $7.20. But as soon as we hit that 20-day, seller stepped back in again. So I think you've got that, and then you're going to have overhead gap resistance. If we manage to get through the 20-day, you're going to have that overhead gap resistance that comes in near 770. So I would avoid it.
And then the next one, we can take a look at a Canadian stock, Canadian National Rail, CNR.TO.
Right. Well, I tell you, I think railroads hold the key somewhat for the overall market because I always look at railroads as a proxy for our domestic economy. If goods are being shipped in North America, we should see it reflected in how these railroad stocks perform. And right now, I think we're consolidating. I don't think they've yet given us that big signal. If we could break out above this consolidation range on CNR, I think that would be a very bullish development. If we break down, I think that's a very bearish development. So off of an uptrend, the sideways consolidation, I'm going to hold on to a bullish slant for now on CNR. But I want to see that breakout above 118, 118 and a half.
Looks good. And then one of the next ones is HollyFrontier, HFC.
Okay, this one, we had Mark Chaikin on the other day, and this was kind of funny because he had mentioned that he pulled up HFC. I forget who he said he was talking to, but he pulled it up and said, okay, let's take a look at Holly Farms. And of course, it's not Holly Farms, but we all do that from time to time.
Of course. That's funny.
Yeah, it's always good to, be able to admit sometimes when you make a mistake. I find that to be
there's another Planet Fitness is a big winning stock, and I've heard people say, and Planet Hollywood, like I think they've been out of business a while.
Yeah. Okay, this one's not exactly a channel. Well, it's pretty close. But you can see the downtrend since it had a huge move up. I think a breakout of this channel at some point would be very bullish, but until we get it, if you're looking maybe for an earlier signal, you can see all these tests, these failed tests of the 50-day moving average. So you might want to take a look at that as a possible breakout area, especially if volume were to pick up. But for right now, it's downtrending. I would probably pass and look for something else.
Sounds good. And then we were talking about financials earlier today. How about KRE?
All right, KRE. Well, we got breakdown, we got a reaction high. We're trying to get back up and test that reaction high. I'm going to say 56 to 57 is an area that I would be watching to try to get a breakout. There's your 56 level. And you can see these lows holding for a few days and then finally break down, volume big, reaction high back to 56. But before that, we had a huge drop from about 61 to 55 or 54 and change. And then we rallied up to about 57, which also, if we go back earlier in, December of 2017, that was an area where some lows lined up as well. So let's just call it 56, 57. We got the 50-day moving average in there as well. If we could get through this and see that PPO cross back up above that center line resistance, then I think it starts to take on a different character on the chart. Until then, though, I'd be cautious. Now, I'm still a believer that in time, rates are going to go higher, although Fed Chair Powell may have put a little bit of a damper on that a couple of days ago when he said we're moving closer to neutral. But I still think we go higher in yields. And I think eventually that will help the banks. But let's see it on the chart first. I wouldn't just assume it's going to happen. So I've got to see a little bit more strength here. I'd pass for now.
You bet. And then ALRM, alarm.
Oh, okay. ALRM. All right. Big gap up. I remember that was earnings related. We came back down, not only filled the gap, but we kept going a little bit lower. I believe we got an uptrend. We got a serious top established, and I think this reaction low. Now, this is a very wide range. So maybe if it begins to show some strength, and actually the strength recently hasn't been bad, although when I look down at the bottom here, except for the earnings day, look at the volume here on this move to the upside. And I don't like today's candle so far. So I think we're just sideways consolidating. I wouldn't do anything with the stock at the current price. If you really think that it's starting an uptrend off of that positive earnings response that we got at the open there, and now we're starting to turn up, then I would look maybe for the moving averages to the downside to hold as support. So I'd wait and see if I get a little bit cheaper, and then you can keep your reward to risk intact. Have a fairly tight stop, maybe even below the 20-day. I would not buy it at 48 and then wait and see if it holds at 42. That's not my style. So if I bought it on a pullback, I would be expecting that rising 20-day to hold.
Looks good. And then the next one, SAVE.
All right, SAVE. Is this our last one, or we got one more?
One more after that.
Okay, Spirit Airlines. Yeah, this is another one. I mentioned earlier the United Continental being a strong stock. I think Spirit kind of fits with that as well. And look at the volume coming in on earlier this week. I guess that would have been back on Tuesday. Big gap up. It's continuing to move higher. I don't like to chase these stocks. So this is one that certainly would be on a watch list for me. But I think eventually, and I did this with my gap trading strategies workshop the other day, but I'd be looking kind of there. And then as the rising 20-day moving average comes up, I think that will offer up some support at some point in the future as well. Again, I just don't like to chase, because if you get in at 64, close to it, and then the stock just has a normal overbought pullback to around 58, 59, you're not going to be feeling very good about it. And if it happens to break down intraday, it's probably going to become an emotional type of trade, which I try to avoid. So I would say at this point, Spirit Airlines is a great looking chart. I just would probably have to wait and see if I could get maybe a little bit of a pullback before I jumped in.
Super. Yeah, it's pretty up there. The last one is CATS. Catasis.
All right, CATS as opposed to CAT. Nice breakout. Not my kind of stock because of the volume. Yesterday and today it's breaking out, but volume, today is only 42,000 shares. I personally like to have at least a couple 100,000 shares. Everybody's different in what they look for in terms of liquidity, but that bothers me trading a stock. And it would be worse if it was 5,000 shares a day. I mean, this isn't illiquid, but it's just less liquid than what I prefer trading. But it's got a nice uptrend, higher highs, higher lows. It's just consolidating. It is breaking out above this more short-term top at about 11, which I like. So I think that could set up for a nice move eventually back up to 14. I love the PPO when it's at the center line and starting to accelerate to the upside. That tells us momentum is building in the near term. So I like the stock. I would avoid it only because of the light volume. And even if I was looking for entry, a pullback down to 11 to test this breakout level, I think would be a little bit more palatable for me. And I think that is it.
Super.
Up on the screen right there, we got the summary of the stocks that we just went over. Pretty good stocks. And of course, there's the bonus. Our producer threw in the bonus, Amazon. We did take a look at 11. I didn't annotate that one. I was going to say annotate, but
it's a new word.
Yeah, that's when you annotate Amazon. It's annotate. Anyhow, all right, let's get into our final market update so we can get into that turning point segment. Let's take a look. Give update here. All right. So this is just what we went over at the early part of the show. Let's see if anything's changed. The Dow, I think earlier was only down about 30. Now it's down 62. So we've seen a little deterioration there. The S&P 500 was up earlier. Now it's down a half point. NASDAQ's turned negative. Russell 2000's turned negative. Nothing huge, but definitely seems to be rolling over here at least midday. 10-year Treasury yield still hovering around that 3.02% level. Volatility index is moving up a little bit more. And if you've been following my blog, that does bother me. It's one of the things that really bothers me about the market right now. And the last 2 days, especially yesterday, we had a huge rally in the VIX. And in fact, I'm going to pull up a chart on the VIX here in just 1 second. Utilities continuing to extend its move to the upside, leading the market. So clearly the market's getting a little bit more defensive with some of the selling. Technology is giving away its gains, now down 3 cents. XLY barely clinging to a 5-cent gain. Energy is moving lower again, but Workday, which reported solid results, still hanging on to its gains, and Goldman Sachs weak, as we talked about earlier. I'm going to pull up the VIX real quick before we get into this segment, because I want to show you one thing that bothers me. When you looked at the market, and I'm going to pull up the S&P as well here in just 1 second, but here's the VIX. Do you see this big move on the VIX to the upside? If you take a look, and I'm going to stretch this out first. Let me make one change quickly here. Let's take a look at this over, 8 days. So it's an 8-day, 10-minute chart I'm going to be showing you. Now, I want you to look at the VIX. And do you see how the open on the VIX back at the beginning of the week, we were at 20.5, and yesterday's high on the VIX was 20.5. Usually what you see is the VIX rising when the S&P is dropping. But when we pull up the S&P from the beginning of the week and we look at where the S&P was at its low, we had a huge move higher in the S&P, and yet again the VIX is not going down. And so that's just telling me the market is kind of got this fearful approach that it's taken. That's the environment that we're in. And I made reference in my blog article today to next week's job report. I'm a little nervous about next week's job report. Not so much that I think for sure it's going to be a negative report, but when you've got an elevated VIX, and if it is bad news, I think it could be a problem for the market with the VIX still so high. And even if it's a good report, when the VIX is this high, sometimes you don't get a positive reaction. But anyhow, I just wanted to kind of expand on that a little bit. Let's move over into Turning Point. This is Mary Ellen's first time doing Turning Point. I know you have a special way of looking at stocks. Which stocks do you think could be at key turning points right now?
Oh, sure. Let me go ahead and take a look at some of these stocks. I'm going to be reviewing them from two different vantage points, if you will, because being in the market that we are currently in, very interestingly, we are seeing stocks that are coming out of oversold positions. But from my work, I do tend to favor stocks that are outpacing the broader markets. I'm always on the prowl for the next big winning stock. And one of the criteria among many is that the stock is at the very least approaching a new near-term high in price, and with an eye toward the stock not having any overhead resistance. So, and also ideally, I've talked about this numerously, the stock breaking out of a base. So what we're looking at here is Under Armour UA is the ticker symbol for those of you not familiar with the company. They do athletic apparel. They manufacture and have a retail space where they offer their products. And what I wanted to point out to you are a couple of things that occurred. The stock peaked back in June and really fell out of favor for quite some time. And I'm going to go ahead and pull up a weekly to give you a feel, going back historically, that this stock, actually perhaps a monthly, because it has been out of favor for quite some time, but that's not showing it to you, but I will tell you the stock had a period of super strength. Wall Street was in love with it. And you can see that the stock did in fact fall out of favor, if you will. But more recently, it is regaining its footing. So this gap up here on the stock is the fact that the company came in with super strong earnings, 92% above analyst estimates. The company guided higher going forward. And what they've done is revamped the company. They have streamlined operations. The company is going to be laying off 400 employees by the beginning of next year. And analysts like it. They raised estimates for this year, up 58% for earnings growth, 27% for 2019. So let's take a look at it technically. And I talk a lot about stocks breaking out of basis. So we can quite simply go back historically here. This is February. We're looking at a daily price chart. Take a look at this base, and we can see the stock did break out in May, and then the very nice advance subsequent to that. So this is the kind of move that you want to capture. This breakout here occurred on big volume. When you can marry that with the RSI trending positively and the MACD, oftentimes you're off to the races. The stock is above these simple moving averages, which are now very much in an uptrend. So take a look at where we are now. We talk about stocks coming out of, again, bases, and we do appear poised to break out. There is a phenom that when these stocks break out of bases, oftentimes the longer your base, so we're going back here to June, so we're looking at a good 5+ month period here. The advance out of that base is going to be longer. That's historically. You'll see stocks move out of 5-week bases, even 5-day. But when you see a 5-month base and a stock breaking out, that can bode very well. We can see the RSI is positive and the MACD. So let's go ahead and take a look at another stock that is in this similar space and is also up in that new high area. This is Crocs, C-R-O-X, and they are manufacturer in the shoe and apparel space. Some of you may have seen their plastic type shoes, super popular. They've come back into style. This is another company that gapped up very big here on earnings in November, and they showed 250% year-over-year earnings growth. The street liked it, stock gapped up. It was 450% above analyst estimates. So we can see the stock gap up. This is something you'll see certainly in robust markets with strong earnings. This was during a period of a depressed market, but it still gapped up. But oftentimes after a stock gaps up, it will need a period of time to digest this big move. This was a double-digit move here, huge volume, institutions wanting in. But this stop and back and fill here is quite simply the stock digesting this big move, and it will do so oftentimes with an eye toward another leg up. So we could potentially be forming a bit of a base here. What they've done, the company has closed various underperforming stores, and they also have new models and of their product that are being met with high demand. The stock next year, analysts are looking for 134% on earnings growth for 2019. So keep that on your screen. Now I'm going to show a couple of other stocks that are going to be a little more down and out, if you will. And I know Tom mentioned KRE earlier today. This is the regional banking ETF. The fact that it very well may have upside resistance here because the stock, the ETF is right here at this downward trending 50-day simple moving average. But let's drill in. I'm going to show you one of the strongest stocks. And by that, I mean fundamentally, the stock is super strong as far as growth prospects. This is SIVB Financial Group. They're based in Silicon Valley. And the company is on track to earn 81% earnings growth this year, but you wouldn't know it by the chart. This is a gap up on super strong earnings, but the entire group got hit. So unfortunately, this stock in line is also getting hit, but analysts are continuing to revise earnings estimates higher. This is a company that is global. Their growth is phenomenal. So let's take a look at this. Is very different from
Mary Ellen, I'm sorry to interrupt you, but when you look at a stock like this, because I think it's an interesting question, I'm sure a lot of viewers have seen stocks. They look at the fundamentals, they look absolutely spectacular, and then you see these ski slopes on the chart. I mean, this is a company that went from early October 330 down to a low below 220, so it lost 1/3 of its entire market cap in about 4 weeks. What do you make of something like? I mean, do you trust the fundamentals more than the technicals, or vice versa?
Well, as far as thinking about entering a position, the technicals are always going to overrule any fundamentals. And that's something that it can be difficult for investors to embrace. You can have the best numbers out there, but if the rest of other investors, the rest of the street are not interested, then that's what you need to pay attention to. So these technicals are definitely going to override any type of strong numbers and outlook. And so indeed, this particular stock fell out of bed with any number of financial banks, regional banks. And so that is going to override any kind of strength in the numbers.
Okay, thanks.
So yeah, so what we're looking at here is a potential uptrend. We can take a quick look at the financial sector, and you'll see that it is attempting to rally here. But let's go back and take a look at SVB Financial, because what I wanted to point out to you is as financials come back, having that knowledge that this was a very much a leading, the best of breed in the banking space prior to the sell-off in the entire group, that's where I'm going to be looking for potential leadership going forward. Financials, it's really a critical component of the broader markets. We need to have the financials healthy, doing well. So the fact that they could be turning is really exciting to me. So let's take a look at this. The stock did reach a 1-year low in price here in the beginning of November, but more recently it tried to rally, pulled back. But again, take a look here. This low here is higher. So we talked about this earlier. A higher low can be very, very constructive. And the price has now broken up above this 10-day, that's this green line, 10-day simple moving average. So when you have these simple moving averages in a downtrend, they are going to act as resistance. Take a look at how it just kept finding a ceiling there. Broke through for a little period, but now we are coming up even higher above. Your next area of resistance is going to be at 270. That's that 50-day simple moving average, but the stock's up 10% on the week, and it is getting good traction in the way of volume. That's something else you like to see. The RSI is poised to turn positive up above this net dashed neutral. And we can go down and take a look at the MACD, the black line up through the red. And then once it gets up above this net neutral 0, that's going to be even more positive. So I'm not anticipating a V-shaped type recovery, but all of this action that we're seeing is pointing to a potential downtrend reversal. At the very least, 249 or 250 is where it's trading now. So 250 to 270, that's almost well, it's about an 8% move, but that's going to be your next area to key in on. So this could be a short-term play until it gets up to that 50-day, but certainly one worth looking at. And then one other name in the banking space that also has strong fundamentals, not quite as strong as this particular stock, but certainly strong in its own right. This is East West Bancorp, EWBC. We're looking at a daily price chart. And the stock's on track. Analysts are raising estimates. And I'll tell you, I do a lot of work. I want these bank stocks to do well. And major analysts out there are telling investors that consumer and commercial loan growth is really quite robust. So this is, Tom talked earlier about interest rates rising. So with that, combining that with loan growth, because banks make their earnings from the spread between the interest rates. You want higher long-term interest rates, which is where they lend money at that rate. They borrow at the lower shorter term rate. So EWBC, let's look at this technically. This is another one. It's had a potential double bottom. You'd like to see this lower period here a bit higher, but it too is now breaking up above that 10-day simple moving average. The RSI is poised to potentially trade positively. And the MACD, it had that positive crossover earlier in the month, and it's just poised to come up above that net neutral. Again, analysts are raising estimates for next quarter, for next year as well, with an eye toward that loan growth. So this would be another one, but certainly it's going to eventually potentially find resistance. We need to get these simple moving averages trending upward in a positive fashion for any kind of rally to really extend and have legs, so to speak.
Yeah, that was definitely, those were some great examples, I think, of stocks at key turning points, a number of them off of downtrends and so forth. So we'll go ahead and give you a quick summary of some of the stocks that Mary Ellen was able to go over. We do have a couple of minutes here left in the show. So I do want to make sure everyone is aware that Erin Swenlin is doing a decision point report now on Fridays. She has her own show at 5 p.m. Eastern. So if you like some of that decision point analysis, this is the end of the month. She's got the end of the week. So a lot of fresh data that she will be sharing at 5 o'clock. Make sure you tune in for that. Mary Ellen, I know you've got a workshop coming up. What are you going to be doing?
Yeah, I do. I have a workshop that's going to be taking place tomorrow at noon Pacific time, and it is super, super timely. It's going to be talking, I'm going to be sharing and revealing a proven method that's going to help you take advantage of what's going on in the broader markets. I've been doing quite a bit of work digging in as far as those stocks this week that have been rallying the most. There are two very typical stocks, and there are very sound reasons that they're rallying. Primarily, they got oversold, overdone is one reason. So I'm going to be reviewing a system and sharing that system as far as helping investors not only uncover these stocks, but then to be able to actively and profitably trade those stocks that really got beaten down more than they should have. These are going to be high quality growth stocks and a wonderful opportunity. You can go to my website, meminvestmentresearch.com, and go to upcoming events, and there'll be a tab there that you can access and read all about what's going to be covered. So I'm super excited about that.
All right, sounds good. We just have a few more seconds. I did pull up your website here. Again, that's meminvestmentresearch.com. Make sure you go in there and you check it out. And we can go ahead and get ready to wrap up here. In 10 seconds or less, what do you think about the market? Do you think we go higher next week?
Oh, yes. The broader markets, I think so. Yeah, I think we're in a bit of an uptrend here. I don't think it's going to be anything explosive. There's still a lot of digestion, certainly given this week's moves, but near term, we are in an uptrend.
Okay, I think we go higher too, but I'm very cautious with that comment. I am kind of watching the downside, but historically we do tend to do pretty well. I am very nervous about next Friday's jobs report, especially after initial jobless claims have been so weak the last couple of weeks. Anyhow, I do want to thank everybody for joining us today. A special thank you to Mary Ellen for joining me today and co-hosting. She will be with me on Fridays going forward. Please remember to complete the survey as you exit. We'd love to get your feedback, hear what you think of Market Watchers Live and the What's Hot, What's Not segment, and so forth. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe. We'll see you back here on Monday. Happy trading.